Hello there, this is James, and you're watching OneRoyal, and it's live. In today's program, I want to chat about the sort of little bit of hope we got over the weekend and the implications of that, and ask the question, has the tide turned? As well as that, I want to talk about other things popping up this week, which is worth keeping an eye on. But before we get into all of that, don't forget, these little videos are for educational purposes only, and in no way whatsoever should ever be taken as financial advice. I always suggest you do your own research, do your due diligence, and of course, know the risks at hand before entering any trade. With that out of the way, let's get started. So, as it stands, the market is really playing a guessing game on what Trump and Trump's administration may do next. Because stocks have, and the market in general has, edged a little higher on the back of diverging messages we're getting from the Trump administrations on tariff policies. Let's just take you through it. On Saturday, it was announced that the US had excluded smartphones, computers, and other consumer electronics, including chips and semiconductors, from tariffs, which is really good news, especially for the tech companies in the US who make a lot of their products in China. And then on Sunday, US Commerce Secretary Howard Lutnick said that these electronics would soon be covered under levies that he said would be separate from those imposed on Pacific countries. Okay. Then Trump then added that there was no exception whatsoever of tariffs on those products. And he said this: we are taking a look at semiconductors and the whole electronics supply chain in the up-and-coming national security tariff investigations. So Saturday, nothing on iPhones, nothing that was impact Apple, nothing to impact majority of the tech firms in the US. But now a backtrack again, or not quite sure. I mean, I think this is the thing with the market at the moment, where they assume, okay, the reciprocal tariffs or the heavy duty tariffs isn't going to impact on things like the electronics industry, like the chips they need, like the iPhones they need, like that sort of manufacturing. So they're like, the market's sort of thinking maybe they're going to go light on this, while they try, because Lipnick also said over the last couple of 48 hours that they are going to try and set up these amazing factories they have in China in the US to build such devices in the US, so we don't have to rely on China to build it. It may take a while, but that's what the sort of market's sort of guessing. And at the same time, the market's also looking at this, and also at the same time sort of thinking, however, think about it. Tim Cook makes a phone call to him and says, look, Mr. President, these tariffs on China is really going to hurt Apple. We produce a lot of our phones over there. It's going to hurt us. We're part of the Mag 7. You don't want that now, do you? So again, it's also sort of giving the market maybe a hint that maybe certain voices, certainly part of the billion-dollar club, might be able to sway him. Anyway, for now, how's the market reacted? Well, there's much rejoicing in the market. And indeed, like I said at the beginning of this program today, which we'll look at in a minute, there is a little bit of excitement and there's a little bit of a boost today. So there is indeed much rejoicing in the market on the back of these recent developments. However, the market has been aware of this roller coaster ride we've had over the last several trading weeks, and it has braced itself for another week of tariff-fueled ups and downs. Because despite maybe the electronics side of things, the iPhone, everything he might be leaning it with, but it's not going away. We've still got 10% baseline tariffs across the globe, 25% on steel and aluminium, 25% on car and car part imports. And we still very much got a trade war between the US and China. And here's the thing, which I was thinking about over the weekend. Okay, just a side note before we start looking at the market, where it is at the moment. It's a side note. I've been in this industry for nearly 20 years, since 2006. Okay, so I was in the industry during the 2008 credit crisis, which is a really scary time. Okay. I was also in the industry during the time of COVID outbreak, obviously, and the implications of the market then. Okay. I've had lots of black swans, S&P being one of them, but I'm just talking about these single events. The COVID, outbreak and the implications of the market, the most shocking NFP number we've ever had in our life during that time, and that impact on the market. And I've also lived through, I was also around, of course, obviously in 2022, when the world faced a massive inflation crisis. But here's the thing. All those times were scary, especially 2008 was very scary. Okay, indeed. At the time, we knew we had a government or governments who didn't want the market to collapse, or the global market, or the economy to collapse. And we knew they would do their best to reassure us and give certainty to the market on both occasions, on all occasions, both during 2008 and during COVID and during the inflation crisis. We knew that the government didn't want to crash the economy, didn't want to crash the market. And they would try to keep us calm and calm the market, give us security and certainty. This time around, not only is the recent ups and downs have been almost self-inflicted, but we don't know what this current administration really wants to achieve, what their end game is. We have an idea of what they think they can achieve, but we don't know what the overall end game is, which adds to uncertainty, which also adds to the fact that this market is yo-yoing like it is, and we hear one thing one day and another thing next day. So I've never, in my 20 years, ever witnessed or experienced something quite like this. But anyway, that's the end of my rant and a little bit of sharing on that. Let's go through a couple other things before we get into the market. Earnings season has indeed kicked off. We had Goldman Sachs announced their earnings today, and their profits rose by 15% from a year ago. And in fact, they benefited of this. Okay. Fees are down, but they benefit from this. Volatility surrounding this whole tariff drama meant that their equity trading rose by 27%, which meant in trading revenue, Goldman had its best quarter since 2009. Okay, since 2009, which of course was the tail end of the credit crisis with that volatility. So that explains that. However, before they get out the bunting and we all celebrate that, oh, okay, everything's great, Goldman Sachs CEO David Solomon, he said in his statement following the earnings, we are entering the second quarter with a markedly different operation environment that we had earlier this year. So basically saying that quarter one's earnings is this, but we don't know the unknown territory we're entering into. Again, making my point that we are, at the moment, even the big investment banks don't know what the Trump administration may or may not do next and how uncertainty the next quarter is going to be. Tomorrow, carrying on with the earnings, we have, of course, Bank of America and Citigroup. Anyway, let's get into the market before I want to go on to another point. Let's have a quick look at the market and some tech stocks where it stands at the moment. As you see, the S&P did open up a little bit higher with a gap. Currently up, not gigantic, but it is a positive because we've had a very, very, very rough time of it. Currently trading at 4,331 points, up 1.29% today. Again, on the back of that little bit of rejoicing that tech stocks would benefit. As you see on a daily, it's opened up with the gap. If we look at the Nasdaq as well, Nasdaq's very similar, up. Really should be up a bit higher, to be honest, because obviously the Nasdaq is the tech stocks. Up 1.39%. I guess he would take it because it's a positive day. If we look at, let's look at Apple first, because Apple really did open with a big gap. If we look at on a 30 minutes, you can say open with a big gap this session, because of course, obviously, Apple under these pretenses that tech, smartphones, laptops, PCs and stuff is going to not impact Apple's supply line, which is the most important. You see that again with Nvidia, again up slightly, not massively though, only at 1.20%. Again, the market's only being open for 45 minutes, so it's early times in the session. And same with Tesla as well. So really, all general, all the Mag 7 is done and opened up a little bit higher today so far. I want to move on to something else away from the market. I want to move on to currencies because there is some other headline stuff today, and that is the greenback, the mighty dollar. With all this stuff going on, there's a lot of concern about the dollar strength in the coming days or months even. And the greenback is indeed under a lot of pressure. In fact, the euro is trading around a 3-year high against the US dollar. The cable, British pound against US dollar, is trading around a 6-month high against the US dollar. And the dollar yen, don't forget, we did a video on this some time ago. The yen or the BOJ might be one of the only central banks who could increase interest rates. This is obviously before this tariff drama. But the dollar yen is trading around a 15th month low. So there you can see. So the dollar is weak a lot against the majors. In fact, it's trading at lowest levels so far in 2025. There is something else, of course, which is benefiting from all this uncertainty. I dare you to have a guess what that is. Obviously, as you know, as I always talk about it, of course, it is gold, which is indeed shining bright. And again, today, it hits a new record high. In fact, it seems to be hitting record highs almost on a daily basis. I mean, Goldman Sachs, for example, was now, along with UBS, along with Bank of America, they're all changing their predictions, their forecasts for the yellow metal, all higher. They've raised their end-of-year forecasts for gold to trade between $3,700 per ounce to maybe the low point, $3,300 an ounce. And this is what they said in a note in to their shareholders. If recession occurs, ETF inflows could accelerate further and lift gold prices to $3,880 per troy ounce by the year end. Anyway, let's have a quick look at both the currencies and gold. So we see euro dollar. If you look on a daily, we can see, like I say, it's trading. Let's reset that so it's a bit easy to see. There you go. It's trading, okay, at a 3-year high. Like I say, currently trading around 1.13375. Again, like I say, there is concern, a lot of concern about obviously going on in the US. People are moving their capital. I mean, the euro, to be fair, has been on a slight bullish run since the EU had said they wanted to start putting more money in infrastructure and defense, which boosted the euro. Plus, as we've done in many other videos, you do see more of an influx of money going into European equities and European stocks, which is also boosting the single currency. Also, don't forget, at the same time, ECB cut rates previously. Fed seems to be holding steady. Plus, we've got something else about the ECB. We've got an interest rate decision this week as well, which are expected to cut, but I'll talk a little bit more about that in a minute. So overall, and you really think about this uncertainty, really, shouldn't the dollar be benefiting from safe haven status? No. At the moment, it's not benefiting from safe haven status. Instead, we've got the dollar yen, or the yen, which is really benefiting, excuse me, which you can obviously see, like I say, trading around a 15-month low, currently trading at 143. When we started talking about the dollar yen, don't forget, I think it was last week, maybe the week previously, it was trading around 149. So we did talk about the potential of the yen getting stronger against the greenback. Looking at the cable as well, trading about 131.58. There's a lot of other stuff going on in the UK, but really, to be fair, there's more noise coming from the US, which is giving the sterling a little bit of a boost. Like I say, trading around a 6-month high against the greenback. And finally, of course, we've got to talk about gold, like we already mentioned. Hit a new all-time high again today. Every day since a new time high. It's nearly like what 2,000, just under 1,000, 3,000. I've been trading gold for years. I remember I used to talk about it in 1,000. $3,251 roughly. Currently down a little bit from that. Battle profit taking, understandably. $3,201 again. So yellow metal really benefiting from this uncertainty. Kind of things I also want to talk about, which should be quite interesting before we go through the other economic events happening this week. Okay. Jerome Powell is speaking on Wednesday. And this will be the first time he would be speaking since a lot of this tariff drama started and the 90-day reprieve reciprocal tariffs have got. So it'd be quite interesting to see his initial hints and what he thinks about the current climate of uncertainty. And as well as that, the market, of course, will be looking really intently to see if he's going to give any hints about May's interest rate decision. There's a lot of thought that though Trump is pushing the Fed to cut rates, there's a lot of thought that maybe this drama continues. They may not even cut rates to the summer. But anyway, Wednesday BBL, the first time we hear from Jerome Powell, really, to see what he thinks since a lot of the drama's kicked off. And since we've obviously had the 90-day reprieve in reciprocal tariffs. And it's also be, first time we've heard since the China-US trade war really kicked off. But anyway, as well as that, of course, some other day coming today, UK unemployment rate, Bank of Canada CPI, US retail sales. That's going to be interesting. Bear in mind last week, Friday, US consumer confidence came in 50. Very low. So it'll be interesting to see the retail sales looks like. Will we see a sudden boost with people trying to buy stuff before tariffs come in? Or will we start seeing the consumer already being scared to spend their money? Yeah, we've got Bank of Canada interest rate decision, ECB interest rate decision, but more importantly, the press conference. I think the interest rate decision, the market's pricing in a rate cut, but it's the press conference. What will Lagarde say about this recent tariff drama, implications to that, and what the ECB may do next? So that is going to be really, really fascinating. Don't forget, this is indeed, of course, a live show, so you can talk to me anytime you wish, or ask me questions, or say hello if you like. Let me know your opinion. Share with me your opinion, what you think. Where do you think gold will go? How high gold will go? Bear in mind, there's so many investment banks now have moved their forecasts for the elemental quite, even I think Goldman Sachs actually said an additional bit. They reckon it's going to hit about $4,000 an ounce mid-2026. So that's how bullish for a lot of people are for gold. And what do you think about these tariffs on electronics? I mean, is this a hint that Trump can change his mind if he gets the right phone call from the right people? Don't let me know your opinion. Don't forget, as well as that, if you're watching on YouTube and you're watching the recording, because I do notice a lot of people go back and watch the recordings. If you have a question or you have an opinion, share it in the comments section on YouTube or Twitter, because we're on Twitter as well. And I will see it and I will reply to it next time I go live, which of course will be tomorrow. And don't forget, if you're watching me on YouTube as well, and you like this sort of stuff, you like this sort of content, subscribe if you like. Hit the notification button so you know next time we're going live. And if you like this type of content and you put up with me, give me one of these. It's nice to know that you like what I do. And the same on Twitter. Give us Twitter X. I'm too old. Give me a little heart. It's nice to know that you like what we do. Okie dokie. If there is no questions, not a problem. No problem. It leaves me to say then, till next time, don't forget, these little videos are for educational purposes only, and in no way whatsoever should be taken as financial advice. I always suggest you do your own research, do your due diligence, and of course, the risks at hand before entering any trade. Till next time, every single one of you, trade safe.